Joining us to dive right in, Peter Schiff. He's the CEO, founder of Euro-Pacific Capital. Peter, good to see you as always. So gold has gained about 18% in just 2019 alone on the back of global recessionary fears that have been triggered, by these long, drawn-out resolutions between the U.S. and China. What does this projection say for gold, and why is it considered such a safe investment for, times of global geopolitical economic uncertainty?
Well, first of all, I think gold should have gone up a lot more than 18% this year. The reason the U.S. stock market went up this year is because the Fed surprised everybody by doing exactly what I'd been predicting they would do. They aborted their feigned attempt to normalize interest rates and shrink their balance sheet. They went back to rate cuts and quantitative easing. This is extremely bullish for gold. Gold should have been up a lot more. It wasn't, but it's going to catch up. I think over the next several years, probably next year in particular, but for many more years after that, gold is going to be one of the best performing asset classes, if not the best performing asset class on the planet.
Wow, so 18% was a low number for you. Do you think we'll see a continuation of gold prices rising? Is it safe to say it's going to continue for gold as well as maybe even other precious metals?
Well, absolutely. First of all, the U.S. dollar was relatively flat this year, yet gold still managed an 18% gain. But the dollar is going to fall through the floor. That means gold prices are going to go through the roof. We are entering in or about to enter a new decade of stagflation, although that may be a mild way to describe it because it has, reminiscent of the 1970s. This is going to be much worse. This is going to be more like a inflationary depression. So this century, the depression is going to come a decade early. It's not going to be the roaring 20s. It's going to be a decade of inflationary depression in the United States.
And now, Peter, there has not yet been any official draft of this U.S.-China trade agreement so far, but the Chinese Vice Premier Liu He is going to be visiting Washington this week to sign something of a pact. We don't know all the details yet. So do you think that's going to impact gold prices? And B, whatever it is that he's going to sign, again, we have literally nobody has any details as to what this is going to pertain to, but will gold be impacted if other goods, other commodities are impacted by whatever this deal is going to be?
Well, I don't think so. I mean, the price of gold is going up regardless of what happens with the sideshow on this trade deal or non-trade deal. The dollar is going to go down. I mean, that's something that's going to happen. That's going to be very bullish for gold and commodities in general. I think all commodity prices are going up. Look at the price of oil. Oil is now back above $60 a barrel. I think it has a long way to go on the upside. But agricultural commodities could really be the story of the next several years, especially if China does end up buying a lot more agriculture from the United States. What is that going to do to prices, farm prices here in the United States? That's going to put even more upward pressure on prices that would be moving up anyway as a result of the Fed, because the Fed's going to go back to zero. They're going to increase the pace of this quantitative easing, which is already faster than when they were officially doing QE. The unofficial QE is growing the balance sheet even faster than was the official QE. But all this is going to shift into a much higher gear as this new decade plays out.
And last, Peter, there are analysts that say something about the impact, the psychological impact of gold reaching $1,500. Is this kind of growth sustainable for gold? And what are your predictions, I guess, for 2020 in the U.S. overall in the economy?
Well, the U.S. economy, again, is going to be slow. We could easily be in a recession. Inflation is going to be higher than what people believe, particularly the Fed. Fed's not going to do anything about it. So we're going to have higher inflation. We're going to have slower growth. I think that we could see a push up in long-term interest rates as the dollar really starts to weaken, and that destroys the international appetite for U.S. dollar-denominated debt. So if you have higher consumer prices and higher interest rates, that's a negative for the economy, but it's a positive for gold because the Fed is going to try to rescue the economy by printing even more money, and all that's going to do is stoke the inflationary fire. So I think, we're going to see a big up move, not just in 2020, but probably for the remainder of this decade. You're going to see the type of move we had in the first decade of this century. Remember, gold did really well from 2001 to 2010 timeframe. And so in the teens, gold really treaded water. This is going to be the next leg up. And I think this is going to be an even more explosive decade for gold than the first decade of this century.
Wow. All right. My takeaway here is gold is the place to park your money, folks. So, Peter Schiff, Euro Pacific Capital founder, thank you so much for sharing your expertise with us. Happy New Year, Peter.
Yes. Happy New Year to you.